everyone. I'm Rebecca Gomez. Happy pre-Thanksgiving.
And I'm Cody Willard, and this is where we truly rock the house.
That's right. We have the CEO of Fresh Direct, hence this cheesecake pumpkin pie medley. And no, I'm not going to throw it in Cody's face today. And only because the crew said that they want to eat the food. They don't want to waste it on Cody.
And we got the CEO from Gibson Guitars in the house. I'm going to even jam it out a little bit with him, I think, and then we're actually going to talk business.
Yeah, absolutely.
It is a business show, after all.
Is it?
This is where Wall Street meets rock and roll.
Hey, it's the day before Thanksgiving, but the bull said thanks, but no thanks. Wall Street yet in another steep sell-off into the closing minutes of trading. The Dow and S&P 500 both fell more than 1.5%. The Dow dropping 211 points. All of the financial companies that are part of the Dow Industrials hit fresh 52-week lows today. Blue chips are down now nearly 10% from their October trading high, but the Dow is still in positive territory for the year. The Nasdaq tumbled 1.3% today. Retail earnings painted a mixed picture ahead of the all-important Black Friday.
Black Friday. And you know, what a great segue into the show. We're talking about the market finally getting to this full 10% correction that we've been looking for. You recall, actually, 3-4 weeks ago on this very show, we said, guys, this is too much. Look for a 5 to 10% correction. Better to be lucky than good once again. Lucky enough, the market has corrected 10%. I'm actually starting to get more bullish. I'd start at least like putting your toe back in the water. I'd like.
Hey, everything's on sale. You know, everybody's looking for things on sale. Come after Thanksgiving, Black Friday, stocks are on sale. At least some of them. Go up and snap them up because the Dow is up 2.7% for the year. The Nasdaq definitely positive territory, up more than 6%. But the S&P has dipped 0.1% into negative territory.
And that's for the year, but more to the point, if you actually take a look at, say, where Google was, where VMware was, where Citigroup was, Bank of America, you can take the average stock in the S&P 1500 is down more than 23% on the since its high. The markets have corrected about 10%, but the average typical stock out there has gotten crushed. And the reason the indexes sort of hide that is because they give more weighting to some of the bigger names that have not pulled back quite as much.
Right, absolutely. Well, let's get specifically into some of these stocks. Gap today reporting its earnings. Their net profit was up 26%. However, if you delve deeper into those numbers, though, you see that their same-store sales, which is what we like to look at, they were down 6%. Gap also owns Old Navy. Sales there down 8%. So you ask, how did they make all this money? Well, they cut costs. They cut their marketing costs. They're watching what they put in their stores and their inventory. So Gap still, Cody, out there struggling. I mean, you know, they hired Todd Oldham, the designer for Old Navy, to try to come up with some solutions. He's done a great job to revitalize or maybe reinvent is the better word for Lazy Boy. I mean, he's now here in Soho in New York. He has a Lazy Boy store made by Todd Oldham, and it's funky stuff, but it's the really comfortable Lazy Boy brand. So hopefully he can do the same for Old Navy.
Hopefully, right? And I mean, you look at a company like Gap, and the fact is, it sort of reminds us of what we might be seeing with Starbucks. The company has already saturated the entire country. It's a no-growth business. This stock has been trading between 15 and 25 for the last 5 years. It's going to be trading between 15 and 25 for the next 5 years.
Well,
move on.
Hopefully the new CEO, he's hoping that doesn't happen. I mean, he was just named to the post in July. The thing that
this is me holding my breath.
Yeah, aren't we all? Especially if you're a shareholder. You know, the thing that I was surprised with this as well is, you know, you're used to seeing those quintessential Gap ads with the celebrities. You know, they're all bundled up in their sweaters and everything. Well, this time Gap's not doing that. They're again trying to save costs.
Well, and actually, I think that's actually a smart move, even marketing-wise. I mean, there's nothing more uncool, less cool. I'm not sure how to phrase it. There's nothing less cool than Gap.
Well, right now, several years ago, they were pretty cool, but hopefully
something that is a little bit cooler, though.
Yeah.
Abercrombie & Fitch.
Absolutely, and this is a company. The net profits were up 15%. Strong sales over at Hollister. Do you know Hollister?
Yep.
I know.
I know because of the company, but I've never been to
beyond,
a Hollister.
I mean, look at the video there. I mean, this is what Abercrombie & Fitch is known for. They have these smoking hot guys when you walk in the store.
I've not done this.
If you go to their website, they have all these. I mean, you know, I wonder.
Girls too.
I hope these guys are over 18 because I felt guilty salivating over these pictures in the website. Look at that, Cody. We talk about showing Victoria's Secret models, and you know, we are fair and balanced here on this network. So.
Some sort, right? I guess that's one version of fair and balanced. No, but
in all seriousness, I did want to mention that, you know, Hollister, this is one of their brands where they're trying to go after the older group, whereas these are people who are done with college and maybe they're out there getting their first jobs. So their products are a bit more expensive. Their net sales were up 14%. And I also checked out their website, Rule.com. This is yet another owned by Abercrombie & Fitch. Well, their sales were up 55%. And yet another, this is the one I think that targets is the post-college group. But, you know, you go into Hollister, I mean, it is super cool, this store. It's so dark. It's like a nightclub. The music is blaring. I cannot hear a thing in that store.
Sort of like this bar sometimes. But the fact is,
super dark.
Abercrombie & Fitch, it has some growth ahead of it, unlike Gap. So, you know, at least if you're going to play in the retail space, this is a name that you might consider as an investment. I still wouldn't touch it.
Well, let's see what Sam Panella thinks about these two companies.